Have you ever wondered why wealthy people tend to pay little or no tax each year? Well, today you're in luck, as I'm going to cover a unique tax loophole that they take advantage of each year called the Augusta Rule. Disclaimer, I'm not a tax professional. Please check with yours before implementing this or any other tax strategies that we mention. And if you're new here, I'm Dr. Jeff Anzalone, a periodontist, helping to educate you about working smarter, not harder. Download the free passive income guide below this video. Now, this particular rule is called the Augusta Rule. So let's start off by defining what exactly is the Augusta Rule. It actually refers to IRS Section 280A and gives a tax break basically for renting out your own home, your personal home. Now, it was named where first implemented, as you can imagine, in Augusta, Georgia, to protect residents of the city from being evicted from their own home each year during the Masters tournament. Now, each year, tens of thousands of golf fans actually flock to this city to watch the tournament. And it really didn't take long for people that living there that they realized, hey, I got all these people coming in. I can actually rent out my home for some serious cash. This eventually led some very, very savvy Georgia tax professionals to find a tax loophole. But don't worry, you don't have to rent out your home to golfers, or you don't have to live in Georgia to actually take advantage of it. This strategy is not only useful for homeowners who want to save big on their taxes, but it can also benefit businesses that actually use their homes for meetings, and we'll talk about that a little bit in a minute. Now, the rule basically states that you can rent out your home for 14 days or less, and you can earn rental income, but here's the thing, you do not have to report that income on your federal taxes. But you must remember, any expenses incurred in renting out the property, those are not deductible. Now, on the flip side, if you rent out your home over 14 days, if it's even 15 days or more, guess what? It's all taxable. Now, this rule applies to any U.S. taxpayer, provided that the home is not the primary place of business. So you can't strictly work out of your home the whole time. Also, the presence of a home office does not make your home your primary place of business. So if you're like me, you have a dental practice, you have a home office, that does not mean that your home is your primary place of business. Now, the rule applies to your primary home, if you have a secondary home, vacation home, any of these. Now, you need to think about when you want to plan these meetings, because a frequently asked question is basically, how much can I charge per night for these meetings? Now, any amount of rent that you plan to charge, it actually must be very reasonable and in line with the local market trends in your area, basically. Another consideration has to do with when you plan on renting out your house. There's plenty of ways you can maximize that, again, for these 14 days. You may consider matching your rentals when there's like a lot of people coming to your area. So if you live in a bigger town, you may have like a Super Bowl, World Series, some college football bowl games, NBA finals, anything like that, where a lot of people are coming into your area at that time. Concerts, conferences, holidays. If you live in Louisiana like I do, Mardi Gras down in New Orleans, depending on where you live as far as people vacationing there, spring, summer, if you're in the mountains, winter breaks. Now, if you're not really sure what a fair market price is, or you're concerned about liabilities, you can just consider contacting your local hotels. You can also look on websites such as VRBO and Airbnb. Now, whenever you search for online for these properties, you want to look for some that are like yours. So for instance, if your house has a pool and a hot tub, it helps to find rates for rentals with a pool and a hot tub. Now, when you are actually going out there and obtaining a quote, you want to consider getting some for catering. You want to see what they charge for conference rooms, if they charge for internet access, projector, screen, all of those different things. So again, all of this, it all needs to be reasonable and in line with what's going on in your local area. And using rental websites is really good in case you're actually audited, as they'll be able to track the rent prices and rental rates year round. Now, something else that this is really good for is for small business owners. And if you're a small business owner, you can actually rent out your home to your corporation for up to 14 days. This allows you actually to shift business income directly to you, again, without paying any taxes. That's huge. Now, the income is not reported, it's not taxable, and the expense the corporation paid to rent the property is deductible to the corporation. Whereas when you did it without without being a small business owner, the expenses were not deductible. In this case, it is deductible. So from a tax perspective, this is fantastic as a business owner. So let me use an example. All right, so Dr. T, he's actually a radiologist. He's tired of paying taxes. Who's not, right? So he finds a new CPA, and the CPA says, "Hey, look, we have this tax strategy that, based on your situation, I think it will work out really well." So during the strategy session, he mentioned this 14-day rule to lower some of his tax burden. And this is how he broke it down to him. So basically he said, "Look, each quarter, what I want you to do is hold meetings." So you have quarterly meetings, all right? And we're going to have them at your home, and we're going to start off by planning for the upcoming year, all right? So some different types of meetings that you can have, or that he can have, is based on some of these things right here that I listed. You could have like a board of director meeting. You could have a shareholder meeting. He could have a business planning meeting, practice budgeting, meeting with advisors such as CPAs, attorneys, consultants, things like that. Investment meetings. We're always having staff meetings, right? What better way to get a tax deduction? Having a staff meeting at your home, renting out your home, right? So in total, in this situation, his company rents out his main home for 14 days, and they figured out that the fair market value was $10,000 for those days, all right? So Dr. T's corporation deducts the rental price as a $10,000 business expense. Now, because the corporation, again, only rented it for 14 days, he does not need to report the 10K of income, all right? He does not report that income. He's very excited because it will potentially save him roughly, because of his tax bracket, $3,500 in tax savings, all because of this one little rule. So think about that, using that every single year for as long as you're working or practice. Now, you may be asking yourself, well, if we do this, how do we report this exempt rental income on our returns? Well, actually, the good news is there's really nothing special needed when filing your returns using the Augusta Rule. As long as you follow the rules that are actually laid out by the IRS, the revenue does not need to be reported. Now, if you plan on using this rule to rent out your primary residence, it'd probably be a good idea to keep track of the expenses in case you get questioned, including like cleaning, repairs, advertising, anything like that. You want to make sure you can prove that you actually own the home at the time of the rental during the 14 days. The rates were at market rent, and then the home was actually used for personal use only during the tax year. So homeowners, if you're a high income earner, again, you can earn tax-free income from your primary residence by using the Augusta Rule. Remember, as long as you don't go over the 14-day rental period, you can avoid paying taxes on the rental income and make sure that everything that you do is documented in writing. Now, if you want to learn more about other powerful tax saving strategies, check out the video over here.